Welcome everyone to the Kindle Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. In yesterday's video, I talked about the extension of going from a 5-3-3 pattern, which was expected to be a contracted pattern, to a 5-3-5 pattern, which suggested that we'd have Thursday and Friday as a continuation of the pattern. That was certainly clear today as the market action moved up to the R2 level on a daily basis and toward the extreme for the week. I'll talk about all the details on this here in a few minutes in the technicals. But as we look back on yesterday, the other thing that I told you to watch for was those continuing claims. If they were under 11 million, that would be bullish. Well, we came in just under at 10.97. That was enough to trigger the sentiment. The algorithms kicked in. There were a lot of stories coming out about the recovery of the economy. I know there's a lot of elements out there that aren't being reported. For instance, California is backlogged in its reporting, and who knows where things really are. But markets are going to respond to the numbers that they see, and that's going to be enough for the algos and other market participants to start to make bids in the markets. And we saw this thing just rally all day. It wouldn't give up. It just kept printing a new high after new high as it stayed positive right into the close. We didn't even really see any major retracement intraday. The other interesting thing, there was a lot of counter punches going on. Nancy Pelosi was out telling everybody they're not going to do an airlines only deal. They're not going to do a deal, but no one seemed to care. Those things didn't bother the markets at all. The markets just stayed in that upward trek. But as we come into today, there is no material news of any sort coming out. We're going to be riding purely on sentiment. As we come into the end of the first full week of October, market participants will be looking to square up trades before we go into the weekend. I don't see any major events happening here, but there still is that potential for a reversal off these high prices, especially after being in the fifth day of this sequence. As we look at overnight action, we're seeing a continuing bid in the markets, pushing up into that higher end of the range that was projected back on Monday off of the market grid. Let's go ahead and take a look at the charts, see what they're telling us for the end of the week. As we review the WaveTech database, the short-term models continue to get traction, but I do need to point out that all of the traction is coming in the 1.2 model, which is the most aggressive model, and the optimized model on 60% of the symbols is 3.2. So we are getting traction in the database. We're not seeing optimized trading systems come into play, which gives this rally a little bit of suspect. We have moved up to 33.45 on the overall database, which is positive, and that 42 number will actually apply whether it's on the 1.2 or the 3.2 model. We're coming into Friday, so we're going to be running our weekly models, and with the markets closing higher, I suspect to see a slight positive rotation. The worst case is we're likely to see it maintain at or around the 60.63% bullish that we are on the intermediate basis. The intermediate models continue to be positive, suggesting we're going to see more consolidation, and ultimately down the road, 3 months, 6 months or more down the road, we will see higher prices in the market on a short-term basis. Because of the rotation we're seeing in the daily models, it is now telling us that we're setting up that short-term consolidation pattern that is likely to move into a more material level, especially if we print back above the 42% bullish on the daily models. As we review the S&P futures on a weekly chart, you'll notice that we have moved up right to the RXT number overnight. We've had a 3460 high, and the RXT number is 3461.75. Now we backed off about 10 handles from that after printing that. We are right now about a half hour before the London opening. It'll be interesting to see if this positive tone will last into the U.S. Open. As I mentioned in the opening comments, we are completing that 5-day up pattern, and that is most evident on the cash market. I'll go through that here in a minute. But we are definitely printing up at the extreme on a weekly basis. As we flip over on the daily futures chart, we've traded just above R1, which is 34.54. R2 is 34.73. and that number is getting close to getting to that 0.76. As I mentioned a couple of days ago, I did not think we could get up to that 0.76 number. I think we're still going to fall short of that. If we do get above the 3460 high that we've had overnight, is very easily we'll be able to run up towards that 3473 number. But that 0.76 number is 3489.91. As we break down the pattern, we had this large ABC, and then my expectation is that we would see a 5-3-5 pattern. Originally, it was a 5-3-3. This reversal day suggested that it might end on that 3, and it just came right back the next day. We were able to get a close over RXT, but the markets continued to defy gravity. It moved up towards the R2 number, which you'll see over on the market grid at 3446. The high was 3447.48, and we closed at 3446.83. So we closed right on R2 yesterday. Now, with the markets being up overnight in the futures, it's likely we're going to see another 10 plus handles higher. Also did yesterday, we closed just above the 0.618 number, which I've been talking about since last week when I put up the original Fibonacci grid. So that is 3443.14. We closed $1 above that. Looks like we're going to open higher. So as we look at the grid for today, what we're going to see is that the expectations for that is an R1 is 34.57, and an RXT print today on the cash would be very close to that 0.76 retracement number. As I said, I did not that we would get there. I am concerned that the PPMs continue to flatten out here in spite of that higher close. So tomorrow's action will be important, but most likely it's going to complete that 5-3-5 pattern. It's very possible that we could end on a positive note. This entire sequence has been stretched out to the extreme. Now, because we closed above the 0.618 number, we do have in play that 0.76 number, which is right at 3,500 with a actual price of 3499.81. So my expectations are that we will finish out this pattern today, and we should start the downward pattern that I talked about before. Just reviewing that, we have this ABC. Everything is in threes. I do believe that we will see the pattern that I'm drawing in unfold over the next several weeks. Some kind of stimulus deal, and I just can't say it enough times that I still don't think we're going to get that, and I think markets could end up to be disappointed. Now, if they extend and they go up to that 0.76 number, potentially going to see some buy signals come in on our models at that time. I still believe that we will not get that buy signal. We will start to back into this pattern and continue in this sideways pattern that I've been talking about for the last couple of weeks. Before moving on to the Nasdaq, I just want to point out that we do have the Russel continues to perform quite well against the Nasdaq. Yesterday, the Nasdaq was up 0.5 and the Russel was up 1.1. So this spread continues to unfold, and I still think we're seeing this rotation going on that I've been discussing over the past 6 to 8 weeks. So I still believe this is setting up. This is actually a longer-term bullish scenario. On Sunday night, I will probably cover the interest rates, and there's some other things going on there. It's confirming some of the things we're starting to see in the small and mid-cap asset classes. Next market we'll cover is the Nasdaq. Market continues to move higher. 11,602 is the high so far today. R1 is 11,597, so we printed above that. The next level would be R2, 11,061.50. This could be printed, but notice these calculations are live, and PPM1, while it's still positive, is starting to roll over, and these markets are becoming vulnerable to the downside. If you just look, as you just look at this pattern that's unfolding, you can see the nature of this pattern that is unfolding here. We're just seeing a absolute sideways pattern. These are not impulse sequence at all, which means that we're not likely to accelerate and take out the highs that we made back in September. That doesn't appear to be in the books. The PPMs really aren't saying this at all, at least not on a short-term basis. As we look at the weekly chart, you see this pattern even clearer, where we have this looks like we're going to continue to stay within the grid that's right here. It's not likely we're going to get above this. I talked about this 2 weeks ago, that the market grid and the volatility range has flattened out, but really what we've done is traded between the S1 R2 number with a little bit above R2. We have a bias to the upside this week. This is likely to start to backfill. I still believe the uncertainty around the elections and other elements out there will keep this market in this pattern for right now. PPM1 is through its first and second derivative and flattened out here. PPM2 is through its first derivative but just holding right above the second. And we're seeing some positive moves down here, PPM3 and the PPM 200, but those are affecting these two averages here that aren't really in play in this current sequence. So the expectation is that we will continue to see this sideways pattern unfold. We may bump up against the extreme levels at R3, 11,698. Don't think we'll see 11,842. The market's likely to start to just kind of cool off as we come into the close tomorrow. Next market we'll cover is the Dow, and the Dow continues to see some minor weakness. The weakness we're seeing is actually translated into a little mini rally in gold I'll cover in a minute, but this pattern is hovering just above that 93.30 level that I've been discussing over the past several days. That's going to continue to be major support on the Dow. We look at S1 is 93.52. We're trading right at that level. S2 is at 93.17, and so far this week 93.90. we have not even printed an R1. I don't expect to see any upside in this market as we close out the week. We should remain in a downward mode in between 93.50 and the 93.65 level. I don't see much movement. The final market we'll cover is gold. Gold continues to trade within the grid that we've seen over the last several days. R3, 1919. The high overnight has been 1917. On the downside, low 1898. We did not get to an S1 on the daily grid. We are seeing acceleration in PPM1, actually the trend level, which is a positive. We still have overhead resistance at the right where we're trading right now, 1915. Last trade, 1912. We have resistance there, and then the next resistance level at 1934. That's a little more substantial. We are witnessing that this downward pressure that's on the 40-period moving average is dissipating very quickly. The weekly patterns that I've been discussing with you continue to unfold. As I mentioned, I think we're sandwiched between the 21-week moving average at 1874 and the 10-week moving average at 1943. So far this week, we've had a high of 1927. We had a low of 1877, right in that range, and I don't see us getting above that. And I emphasized this over the past several sessions that the PPM1 right now is at a minus 0.38. PPM2 is positive, and that's what held this market up this week at that 1874 level. That's right where the major support is. We're not likely to get below that level. It doesn't appear to me on a weekly basis we're ready to break above that 10-period moving average, as it's still down at 0.38, which suggests the number will come down about 7 or 8 points. That will put us right at that 1937, 1933 level as we come into next week. So that downward pressure will be very prominent. At the moment, I don't see us getting below that 1874 level, which is that 21-week moving average. This will complete the video for tonight. Thanks again for a great week. Everybody have a great weekend. We'll talk to you on Sunday night.